Aramco today, we learned potentially the biggest IPO in history, going to come later this year. So much of the news around the IPO market this year has been negative. What has to go right for a big IPO to go?
Yeah, so thanks for having me, Ed. So look, I don't think I'd agree with your premise that the IPO market has been bad this year. I think we've seen a few situations where things have clearly not played out the way we might have expected, but you've really got to dig deeper and understand the nature of the stories that are coming to market, what works and what doesn't work. So high growth, high visibility on earnings and financial performance flying off the shelf still. Think of enterprise software deals. And then high growth, less visibility or no visibility, the market's clearly pushing back on those sorts of stories. But it's not, we can't paint the whole market with the same brush.
Okay, so if we've seen that bifurcation, then let's talk about some of the more high profile things, WeWork, Uber. What is going wrong with them that means they're coming to the market with valuations that consumers are saying that just doesn't match up with what we see?
So I think it's fair to say that for a little while, everyone was just focused on the high growth aspect of the equation I just went through. And I think we all got perhaps a little ahead of ourselves in terms of value. So there's been a value reset clearly with names like that, where the financial performance is a little bit less visible, or in some cases not very visible at all. So the market's reset on value, and we all have to remember markets price IPOs, not bankers, not companies, not the media. And that's just the feedback we're clearly getting right now.
And another function has been, as you say, look, we have seen some good IPOs this year. We've also seen a lot of day one volatility. Some IPOs doing well have actually gone up massively straight out the gate. What would you define as actually like a good IPO process? Because if something is up 40% on day one, that doesn't necessarily mean it's been well priced.
Right. So that's a really good question. And I think beauty is in the eye of the beholder a little bit. So every company goes public with its own set of expectations, its own plan for the future, capital that it needs to raise in the future. So you really would have to ask each CEO of every company as to whether or not they felt their deal ultimately went well. So it's not a question of trying to pinpoint an exact price and that it trades flat on the day. I'm not sure I'd define that as a successful IPO either. So it's really case by case.
And how important is momentum, sort of getting the story right? As you say, the media is partly responsible for sort of a lot of the pre-IPO momentum of some of these names, but how much does that actually factor into what happens, that sort of, that narrative around a company?
So look, I think it's one of the challenges among many that you have to manage as you bring a company to market. At the end of the day, what matters is the business model, the delivery of that story to investors. Investors do their homework and make a decision, and then they trade the stock. Remember, an IPO is one moment in time. It's not a referendum on the strength of a company. It's one moment in the story of a company. So I think we have to keep staying with the basics and delivering on that model. And some of the noise around these stories, and the media loves to talk about certain stories, particularly the consumer internet names.
But some lend themselves better to being talked about than others, right? WeWork was an obvious example where there was a cast of characters and some companies involved that made it interesting to talk about what was happening.
Sure, but all I can say is I'm in the banking business and my job is to deliver good corporate finance advice to all my clients. WeWork was a great client before, they're a great client now, and we're continuing to do everything we can to help them, as we do with all our clients. That's our job.
Let's talk about M&A. Interesting trend this year among technology deals. Tech has been a strong driver of M&A going through the cycle. This year, the biggest technology deals have all been in the fintech space. Why are we seeing that shift from consumer to more sort of financial orientated technologies?
Yeah, I think there's a lot of big battles out there in tech as we move forward. Fintech is clearly, we're at the first or second inning as to what's possible in fintech. I mentioned enterprise software and the race for cloud. We're still in the first inning or two there. So I think despite pretty lofty prices in the market, companies that find strategic assets that they just feel they must own are still doing M&A deals and making acquisitions. And quite frankly, the market is rewarding companies, despite prices sometimes, for making those moves. But you really have to make the strategic case for those big deals and for those big prices, but we're seeing that continue to happen.
Is it also a sign that perhaps that sort of race for content, which has been so much of the driver in TMT for the last couple of years, is beginning to cool off, and people are potentially looking at other areas, and finance being key among them?
Yeah, I do think that if you're a company with a big subscriber base, a big customer base, I think you're going to look increasingly at ways to monetize that asset itself. It's not just delivering the one piece of content or service that you've always delivered. So I think what's going to be interesting now is taking a leaf out of Amazon's book a little bit. Every company is going to look to leverage and monetize that customer base. So we could see companies moving into interesting areas, and fintech and consumer finance is just one of those.